Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Tuesday, January 9th, 5:28 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we're in an uptrend. You can see over on the trend gauge last week's weakness in leadership and the NASDAQ 100 small and mid caps have our arrows in neutral for those two criteria, but uh, certainly improvement the last 2 days. We've got the green arrow here and shifted a little bit further to the right, which is bullish for leadership and for short-term moving averages, as NASDAQ 100 held the 21-day moving average for the second day in a row. Small caps and mid caps undercut but reclaimed by the end of the day. Not quite ready to put this back to the green arrow, but certainly a good sign. Medium term, all five of the major indexes still trending above their 50-day moving average and also their long-term 200-day moving average. So green arrows there. What happened today? Well, after a nice, strong day yesterday, we woke up to a decent-sized gap down, 0.5% on the S&P, 0.65% on the NASDAQ, 1.2% on small caps, and 0.6 on the Dow. But buyers showed up and supported those opening levels right away, worked their way higher to early afternoon, then kind of based into the close with a mild fade built in. All in all, a win for the bulls, despite the red that you see on the screen here. Here are the final numbers. The Big Seven up 0.31%, despite Tesla being a serious laggard, down 2.3%. RG8 down 0.5%, but I said leaders were fine up here. FFTY, that's the IBD 50, up 0.75%. That supports the action of leaders. S&P 500 only down 0.15% after the 0.5% gap down, so good stuff there. Equal weighted S&P 500 down 0.5%. NASDAQ 100, nice recovery, up 0.2% after its 0.65% gap down. Equal weighted, positive, but just barely. Dow down 0.4, midcaps down 0.6, Russell 2000 down 1.05, Global 60/40 down 0.26. This was mostly stocks, global bonds. Broad global bond index was flat despite the long bond being down on the day. In-house GROTECTION up 0.35%. Nice performances by our several of our big positions, Crowd and NVIDIA. Also a good day from AMD, and we added 2 new positions today. We'll talk about them momentarily. Let's get right into the charts. Start off with the S&P 500 here. Notice the stochastic hooked up and crossed the moving average. That's a positive. This happened for the S&P and the NASDAQ 100, not yet for the Dow and for the mid caps and small caps. But we're keeping an eye out for that. It's a positive sign, and it supports the holding of the 21-day moving average and then bouncing up off that, and a test and hold of the 8 EMA for the S&P 500 today. So good stuff there. Here's the NASDAQ 100. Didn't quite get to the 21-day moving average, tested the 8, made a positive close. Good stuff there. Dow Jones Industrial Average, negative on the day, tight inside day, closed right on the EMA, a little bit of lagging this week in the Dow as tech has come back to the fore this week. Mid caps undercut and reclaim of the 21-day moving average, certainly a positive. Also small caps, despite being down 0.89%, actually over a percent, slightly out of whack with the index and the ETF, but undercut and close right above the 21-day moving average on IWM. We want to get back above this declining 8 to put some confidence behind that. You can see how small caps have been lagging the last 2 weeks. So those are the major indexes. How about the VIX? Positive for the VIX, got back above the 21 with the gap down, closed back below the 21. That's where we want it. Like that declining 50-day moving average as well. The US dollar. The US dollar gap down, but closed near the top of the range back above the 21-day moving average. Not quite what we want to see. Let's go to the 5-minute on this. Actually, it didn't gap down. This is showing a gap up. Does that doesn't, oh, okay, because there's the close. I was looking at the close up here. Yeah, slight gap up and closed at the top of the range. Not positive for stocks, but not a big impact. How did it impact gold and gold stocks? Well, GLD was basically flat. GDX, however, taking a beating, down 1.8%. We're staying away from these for now. Bitcoin, we sold BITO today because the word is that it's tentatively, the spot is going to be tentatively approved. I mentioned on last night's video, the expense ratio for BITO is 3 times what we're expecting several of the spot Bitcoin ETF expense ratios to be. So we sold our last piece of this for 30% gains. We're expecting some volatility with this approval. In fact, after hours, an SEC, the official SEC Twitter page said that spot Bitcoin ETFs were approved, and then Gary Gensler, the SEC chairman, had to come out and say, that's not true, our website was hacked. That's what you love to see, is the SEC Twitter account being hacked, right? But expecting some volatility in Bitcoin. I'm going to wait till the dust clears on this. We're going to get back into it. Still assessing which is the best ETF for us to get in, and that may not be clear for a while. But all the big boys have ETFs being made available when these are approved. The word is they're supposed to be approved tomorrow and trading on Thursday. We'll see. But for now, we're just going to dodge the volatility. BND, broad bond index, tight, second inside day on that. TLT, however, down 0.64%. So the long bond yield popped a bit while the rest of the durations did not, up 1/3% on the TYX. Is that everything? Yes, that is everything. I wonder if you can hear my dog barking in the background. Where are we now? We are on the tail of the tape. You can pause this. So S&P and NASDAQ, stochastics have improved, but 3 of them still down. 7 of the 8 RG8 are down. NASI RSI down and overbought. We want to see this supported at the 70 level. News, I mentioned this, the spot coin bid ETF. So day count from up 1 to up 1 with a consolidation, second day above the 80 EMA, third day above the 21 EMA on the S&P 500. Our expectations positive now as long as we hold the S&P and the NASDAQ 100 on the 21-day moving average. Strong on the day, cybersecurity, big upgrade for CrowdStrike, and quite a few others followed the coattails of that. XLK and XLP slightly positive on the day, uranium positive on the downside, oils, regional banks, and emerging markets. Portfolio changes. We sold the QID with the gap down, but the bounce at the 21-day or above the 21-day moving average. So we took a small loss on that. Bought Uber and PDD. I'll review those charts in a minute. And we did the offensive sell on Bitcoin. Bottom line, good stuff. That gap down gets bought. NASDAQ 100 and leaders acted fine. Small and mid caps undercut and reclaim their 21-day moving average. Except for the gap down, that's all positive news. Let's take a look at a couple of individual charts today. So Crowd upgraded for the second day in a row, and beautiful slingshot off of this 250 level and this consolidation right by the 21-day moving average, above average volume for the second day in a row. Great to see that. NVIDIA. Remember that the CES 2024 conference is being dominated by AI, and you can see big volume on NVIDIA too, since it broke out of this flat base. Actually, it's a base on base, clearing this 504, 505 pivot, following through again to the upside, 2 days above average volume, up 1.7%, slightly off the high of the day. AMD, we also own, also acted well, coming back to the top of its range. Lilly, which we own, kind of going sideways now as tech has come to the forefront, just kind of really putting in a handle at the top near this top of this flat base. So what did we buy? PDD. We owned this a little over a month ago, got stopped on it when it wasn't showing any progress, but several bounces off the 21-day moving average. Look at the really small volume 2 days on the last 2 days of a pullback, bounced at the 21 yesterday, and 2 days of volume well above the 2-day consolidation is the point I'm trying to make. And this is a close, a high close versus this gap up on earnings. So PDD, I know it's a Chinese stock, but the Temu website, it's got less, let's just say it's got less risk than the regulatory risk than some of the other Chinese names. So it's very clearly being accumulated. And also, Fidelity Contra Fund took a position in it in December for the first time. If it's good enough for Fidelity Contra Fund, it's good enough for me. That's Will Danoff is a legendary growth investor. So, and then the other one we added, something we should have been in for a while but got shaken out back, but reclaiming the 21-day moving average today and the 8 EMA is Uber. No serious volume. Well, 1 day above average volume on this pullback. But reclaim, it's a leading stock back above the 60 level, kind of basing sideways now for about 6 weeks. Good point, good entry point versus a stop out level. 7.5% above its 50-day moving average, but this is one that if you look at the weekly, it bounced right at the 10-week the way it was supposed to. So as long as it holds last week's lows, we're going to give it a shot. 2 buys on that today. And a couple other names that are acting well today. Urban Outfitters upped guidance, gap up on volume, up 7.7% on 157% above average volume. So gapping out of kind of a sloppy base there. Also acting well, started talking about this last week, just missed it, SMCI. Second up day in a row, second day above average volume. Again, AI stocks have been acting great. This is data center supplier. Good looking stuff there. TMDX, there's also a healthcare conference going on right now. They apparently had a good presentation today. Breaking, undercut and reclaiming that 21. The 21 undercut and reclaim is a powerful pattern. 40% above average volume on this, up 7% on the day. ELF continues to act well. These are some things that are on our very close to our watch list. And again, that's the undercut and reclaim of the 21-day moving average. And Shopify, I mentioned this is one of the two, along with Snow, that reclaimed by the end of the week, last week, that reclaimed or was at its 21-day moving average, and 4 days up in a row for Shop. Snow is the other one we're considering getting back into after getting stopped out last week. And that's going to wrap it. As always, like to hear from you. The email is don@revereasset.com. Leave a comment on YouTube if you're listening or watching there, and please like and subscribe. It helps get our content out there to get it noticed. If you're interested in becoming a client, my partner is Dan Stewart, Dan@RevereAsset.com. The phone's 855-REAL-WEALTH. That's 855-732-5932. Remember, it's not how much you make in the market, it's how much of that you can keep. We're very happy to see the market supported the last 2 days after a rough opening week to the year, but leaders supported where they needed to be. That's either the 21 or the 10 week. So good stuff there, and we continue to dip toes back into the market as we saw strength in leaders, and our expectations are positive, let's just say that. And with that, I'll wrap up the video for Tuesday, January 9th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great day.